Hi, everyone, and welcome to the first of a new series of CoinDesk webinars. Our guest for this webinar is B2C2, a leading cryptocurrency market maker connected to markets around the world, across Europe, Asia, North America. Did I leave any continents out? We're delighted to have with us its founder, Max Boonen. Max, hi, where are you now?
Hi, Noel. I'm in Portugal right now, enjoying the weather here.
Very nice, almost spring, I hope. We also have the CEO of B2C2 Japan, Phil Gillespie. Phil, where are you located?
Hi, everyone. From Japan, from Tokyo, Japan, calling in.
Late, it must be late your day then, huh? Long day. Huh?
Yeah.
And we have the head of
Getting
OTC
started
sales. Yeah, I imagine. We have the head of OTC sales, Zane Taggett. Zane, where are you calling in from?
Hello. I'm calling in from Phoenix right now.
What's the weather like there?
Oh, it's beautiful every day, always.
Nice, rub it in, why don't you? Today we're going to talk about cryptocurrency markets, the trading environment, recent developments, current trends, cultural differences. We're also going to touch on infrastructure, regulation, economics. There's a serious amount of expertise on this panel today who have a lot to say about what's going on in the crypto markets. So let's get to it. But first, those of you who have signed in, you'll be able to send in questions. You'll see at the bottom of your screen a bar to do that. We won't be able to get to all of them, and there are some things that we won't be talking about for legal reasons and also because the subject matter is probably best suited to other webinars. But we will do our best to get around to most of them. Before we dive in, let's get a bit of background. Max, I'd like to start with you. You co-founded B2C2 in 2015. Before that, you were a swaps trader at Goldman Sachs. Why? I mean, not why were you a swaps trader? We'll get around to that in another conversation. But why leave the hallowed halls of Goldman Sachs to set up a business based on the volatile world of cryptocurrencies?
Well, quite simply, Noel, in 2015, the fixed income markets were not doing very well. The volumes were very low across the board, and I had a feeling that would continue together with low interest rates. And so I thought, I had a very good time at Goldman Sachs. I really loved the people there. I learned a lot, but it was time to move on. And I was looking at crypto because I'd been doing electronic market making on the side, for it's been 10 years now. And I thought, hold on, there's that Bitcoin thing. Perhaps I should, plug some algorithms on there and generate a bit of passive income. That was the plan at the beginning. I didn't expect the market to grow this big, but you have to deal with what you're given. So as the market grew, we started expanding, hired Phil, etc. But at the beginning, I just thought, I could have a nice lifestyle, some passive income, just trading crypto, and that's what spurred the move together with the low volumes and the low levels of activity in the fixed income market.
How did you hear about Bitcoin first?
Well, actually, credit goes to my flatmate at the time. It was a quant at Goldman, or Strat as they call them. I used to make markets on platforms like Betfair, that you may have heard of, for sports bets and things like that. My flatmate told me, I came across that Bitcoin thing was in 2012. You should look into it, with your algorithms, etc. And I remember buying a little bit back in the day, thinking that's the sort of thing that either is going to go to 10,000 or zero, and let's make a cheeky bet. But to be honest, as soon as it went up 10x, I just sold everything. I just sold everything because I thought it was too good to be true. And I haven't bought another Bitcoin since, actually.
That's interesting. I imagine a lot of people are in that boat and probably kicking themselves too. Phil, you joined B2C2 very recently, also from Goldman Sachs. Why jump over?
Well, I mean, for me, it's a little bit different reason from Max. I mean, I was doing systematic market making in FX, which is a really, really mature market. I enjoyed FX. I've been doing it for a long time, but you always kind of think, in the beginning, 10, 20 years ago, when these kind of electronic markets were starting up, there's just so much, like action and, so much innovation going through. And the crypto market is interesting because it's kind of like the rebirth of what everybody went through 20, 30 years ago in electronic FX trading. So, I mean, it's a huge appeal to me because, you think about it and, you kind of look back and think, wow, like there's so much development that's happened in the last 10, 20 years. And now it's an opportunity to basically do exactly what happened in FX in crypto. So I mean, that's a massive appeal for I think a lot of people who wants that challenge.
How did you manage to explain that to your family and your colleagues?
I mean, I think my colleagues all kind of understood it. It's quite interesting how everyone just completely understood this viewpoint. And there are other colleagues that also made a similar jump. So it's not. I don't think I'm an outlier at all. And my wife, she's more than happy to help me out as well. So we're all in this as a team. So yeah, I mean it's so far not too many people looked at me in a weird way, thinking saying what were you thinking at the time, right? So I think everyone kind of understands the move.
Yeah, and they also probably all find it increasingly intriguing, especially given the media attention. Zane, you're bucking the trend. You're not from traditional finance, but you have a long track record in crypto trading, first with OKCoin and then Bitfinex. Is that right? And now you're head of OTC sales at BTC2. Tell us more about that and what your aim is.
Okay. So yeah, I started working in crypto companies back in 2014 in China at OKCoin, and when I was there, I met Max, and he was doing strong volumes on our platform. And then I moved over to Bitfinex and kind of saw how large of an operation B2C2 really was. So when I wanted to go into the OTC side of things, Max was the first person I talked to. It seemed like a good fit, so I joined in November 2016. And since then, just been trying to help grow the OTC side of the business, and just trying to deal with the crazy market that is crypto.
The crazy market that is crypto. Given your background and your role now, what's your take on this crazy market that is crypto? What reactions are you seeing from your clients and contacts to what's been happening in the market recently?
Well, I think for me personally, I've become so desensitized to it. It's just another pump, and it's just another volatility-ridden period. And I think a lot of the people that I talk to the most are of the same opinion. It's just that we've been through this. We've been in this space quite a while, so I don't see the freaking out. It's all coming crashing down. I think we're all just kind of seeing the Bitcoin market do its thing, and there's not a big surprise there.
Well, part of a day's work. That's actually a very refreshing take.
Yeah.
Phil, what's your take on the recent correction and market sentiment in general?
I mean, from my side, it's quite interesting. I mean, it's a bit comical in a sense because, I officially resigned Goldman on January 29th, and I still remember at the time, there were some announcements that I joined BTC2, and then, Bitcoin just started collapsing, right? So I was looking around thinking, what's going on here, right? I was like, well, the timing was just, is pretty funny for me. And as I joined the firm officially and I started engaging a lot of the clients, I quickly realized that sure, the market's falling, but and it's, you have to also remember I was in Japan and there was the coin check incident simultaneously, so I was quite worried that maybe people were going to say, hey, you know what, I've had enough, right? But instead, what I found was that our clients telling us that they're having record account openings, the interest is still very high. I turn on the TV and I'm still seeing commercials, to open an account to trade Bitcoin, and just the overall sentiment was very strong. So that really, really reassured me that I made the right decision, and Japan is definitely taking center stage in the crypto world.
That's really interesting. So the current slump has not hit sentiment, you're saying?
Yeah, I mean, I think, and I've spoken to a lot of friends, and I still remember I was out, having dinner with some friends when the market was kind of really taking a dive, and what people around me were saying was like, oh, this is going to be a great opportunity to buy, which is reassuring, and it's kind of quite interesting that people are pretty engaged, and they're all kind of keeping an eye out for an opportunity to buy the dip, and sure enough, we've who knows what it's going to do for the next few months or a few weeks even, but it seems like maybe we found the bottom for now.
That's intriguing, the absence of hysteria in the market that you're moving in. I'd like to go on a bit or a lot actually, to market structure, which is a fascinating concept that you guys know so much about. Max, your clients are institutions, family offices, brokers, other exchanges. I'm probably missing some segments in there, but what has the evolution of this mix been like over the past 12 months? I mean, who were the first in of the institutions and who are the newer players?
The evolution is along the lines of, people's increasing degrees of comfort. So back in the day, the OTC market was very much, some guys with a lot of money that were trading on the exchanges. Sometimes they had a bad experience. Some of the exchanges went bankrupt, or perhaps the liquidity wasn't there for their sizes. So there was a burgeoning OTC market that centered around those whales, as they're sometimes called. And then after that you started having smaller institutions or more like family offices, minor asset managers get into the space because they were small, nimble enough that they could manage to get the right mandate to start trading crypto. And as it becomes more mainstream, you see people with stricter mandate, bigger firms are starting to dip their toes. So you have FX brokers that typically are a little bit more aggressive in financial markets. You have some hedge funds, and I suppose that where we're getting the direction is towards the major asset managers, the banks. Those guys are going to be the last ones to come in.
Phil, over in Japan, what's the market mix like over there? Is it different from the U.S.?
Yeah, I mean, it's still, I think in general the retail market is the primary market in Japan, but you're starting to see that it's diversifying out. And one thing that I found very interesting was that when I speak to banks in Japan, they're a lot more open to dealing with cryptos here. And my understanding is that there are a lot of different kinds of large institutional type players who are looking at many different projects. And I don't think I can go into any specifics here, but it's been quite enlightening that there are a lot of projects and a lot of interest from counterparties that I never even imagined were looking at crypto.
When you say dealing in crypto, do you mean on their own books, or do you see banks looking at setting up separate crypto trading desks?
So, from the extent that I could say, I mean, I think it's, looking at projects dealing with cryptocurrency, and that can be a wide range. And, I don't think it's just, one thing is just buying and selling, facilitation of trade, brokerage. But I think there are people out there that's looking at, other services that they can provide. And, really that's the kind of the development and that's the kind of mentality we really need right now, whether it be custodial service or, anything else, right? So, it's been quite interesting that, people are getting engaged and they want to be part of building up the infrastructure for this business.
And Noelle, if I may jump in quickly.
Yeah, please do, Max.
For the past 2 years, people in the crypto markets have been, it's been all about the institutions, but, you get the feeling that some people think those institutions are, some sort of magical unicorns, that have their sort of existence in a sort of different plane of existence. But in reality, the vast majority of institutions, at the end of the day, serve retail clients. Pension funds are just an aggregation of a lot of small contributions from moms and pops, and same goes for the all the asset managers, insurance companies. At the end of the day, the financial markets serve the needs of of the population, right? So when we think of institutions, we tend to view them as something very different. But at the end of the day, you've got real people behind that. So that's something to keep in mind.
Do you see the institution's interest in crypto being driven largely by the retail market?
Well, either me or Phil could answer that question. I think still the crypto markets are very much a retail-driven market, and that's going to be the case for I think for quite some time. Yeah.
Yeah, and from my side, I mean, just to add, I mean, I think it's all about hitting the critical mass. Whether it's market cap or whether it's 100, 1,000 retail customers is one thing, but when you start getting millions and millions of people involved, and when your market cap starts hitting billions of dollars, I mean that's when the interest comes in, and that's when that's what we're seeing right now, pretty much, right? that more and more players are coming in just because we've hit that critical mass. And I think, Max was obviously involved for this in the crypto space for a while, but I think last year was definitely one of those breakout years where we've hit that critical mass. Is my take on it. But
so you spent years supervising and trading the FX markets. What parallels do you see between those and the crypto markets?
There's a lot of similarities. At the end of the day, and this goes not just for FX and crypto, but any kind of financial instruments. There's obviously a bid and an offer, and there's a market there. In FX, it's quite similar because of I guess some of the client bases could be similar, and the way in FX you don't hedge at as an exchange per se, but you do deal in these kind of primary exchanges. It's similar but a little bit different. The major difference I think is just you have this extra technology aspect. You have this the crypto aspect, which does add another dimensionality to it. But at the end of the day, when it comes down to the raw trading, it's the concepts are all the same, and it's I think it's not just between FX and crypto, but same for commodity trading or other FIC assets.
Dane, you're focusing on the OTC market. What changes have you seen in the relative weightings, for instance, of OTC and exchange trading? How has your segment changed?
Well, I think the OTC market and the exchanges both had quite a bit of change this year. I think the OTC market definitely grew a lot more than people realize. We've seen major desks pop up and gain pretty big market share. B2C2 only really started getting involved in OTC at the beginning of the year, and the amount of growth and volume that we've seen since has been staggering. And I think on the exchange side, one area that we're starting to see a difference in OTC versus the exchanges is the exchanges are moving more to crypto to a crypto setup, and so you're starting to see the pop up of crypto exchanges, and then on the small cap coins, all of a sudden, boom, there's $1 billion in volume. But within Bitcoin, Ethereum.
Sorry, Dane, what do you mean by crypto setup?
So exchanges like Binance that don't have fiat deposits, Binance, Poloniex, Bittrex, although Bittrex is soon adding fiat, Huobi, OKX, and a lot of the exchanges that had fiat moving to the crypto setup. So I think the exchanges are seeing the majority of the volume on a lot of the smaller cap coins like Tron or these burgeoning coins that pop up. But within the more established cryptos of Bitcoin, Ethereum, Bitcoin Cash, I think OTC has gained a lot more market share over the past year, and it'll continue to take market share from the exchanges moving forward.
Because of the unusual pairs that dealers are looking for?
I think that the unusual pairs, they're going to see stronger volumes on the exchanges just because it's a lot easier. The exchanges have so many different pairs. But I think within Bitcoin, Ethereum, Bitcoin Cash, the more established, the larger cap coins, the OTC has taken market share over the past year, and I think it'll continue to take more market share from the exchanges in these larger cap coins.
Yeah, interesting. Why is it taking market share?
I think there's a lot of aspects to it. For one is the counterparty risk of trading on exchanges. Max talked a lot about ways that the crypto space needs to grow in his CoinDesk speech in Invest, and part of that is the separation of trading and settlement, and the exchanges having to hold the funds, hold on to customer funds in order for them to trade represents a big risk to those clients. So when you trade at OTC, we're able to do everything on a post-trade settlement basis, which greatly reduces counterparty risk. And then there's a lot of other things that I think reasons why OTC is taking over. I think the exchanges have seen, they've been kind of breaking at the seams. Well, not exactly breaking at the seams, but they've definitely been stressed. Binance was down the other day for an extended period of time, and then a lot of the exchanges had to turn off new user registration. And so OTC, for the larger clients, it delivers a higher level of service. You know, we only deal with high level clients, so we don't have 10,000 customer support tickets coming in, every hour. We have a few select clients, and we treat those clients with the highest level of service. And I think that's appreciated. And so more and more people are starting to go to the lower risk and higher service model of dealing with OTC desks.
And what about the regulators? What's their take on the OTC growth? What impact could that have?
To be honest, I don't have a lot of insight. So yeah, please, Max.
Yes. Well, I think that, you're on an exchange, let's say Coinbase, you have, thousands, millions potentially of customers. And in order to get banks comfortable with that, the sheer numbers that we're talking about, it's very difficult. And Coinbase has certainly done, tremendous effort into getting all the licenses in all the states in the US. I mean, it's crazy. And some people, I think, are just thinking, well, there's a massive altcoin market. I don't need to have any relationship with the banking system. And so I'm just going to do that, I'm just going to list all the cryptos that you can think of. And people are going to come. I don't actually need to offer crypto to fiat pairs. And so you see that, as an OTC market maker, it can be easier because you serve, a select few that oftentimes are going to be, potentially regulated. So the model in terms of distribution is quite different when you look at OTC. We're going to have clients, and our clients have their own clients, and maybe they're regulated institutions, and so they're able, without too much difficulty, to reach thousands of people. But they already have the setup in place in order to do that. They have the banking relationships, etc. If you start a new crypto to fiat exchange today, it's very difficult to get banking. So I think that's also been one reason for that.
Do you see that? What impact do you see that, or the development of the OTC market, the expansion of it, having on volatility, if any?
The impact of the OTC market on volatility?
Yes, because a lot of the trades are off exchange, and the volumes are obviously very different. What impact could that have on liquidity and volatility, I guess?
Well, I'm personally of the view that OTC is simply a gateway, just like the exchanges are also gateways to the market. But at the end of the day, it's one market. There can be small discrepancies, but really, the price goes up on the exchanges, it also goes up OTC and vice versa. So I don't think that it has an impact on volatility proper. To me, the volatility is driven by the fact that, people change their minds, people have different opinions as to the value of crypto, and, that's what creates the market. And when people change their mind, fast, then the market becomes volatile. But I don't think that the addition of OTC markets really changes the volatility mix. Except that that's not. I would say that's not how it usually works. When you're able to find a big buyer, you're able to find a big seller, and those people can talk to one another and trade rather than being intermediated by the exchanges. You can have. It's possible that the volatility is reduced, but to me, volatility is really something that is not really dependent on whether you trade OTC or an exchange. It's the volatility is driven by what the end users actually want to do.
And it all depends how you measure the liquidity in the first place, anyway. All right, go ahead, Phil.
Yeah, and just to add to that, I mean, talking about the kind of experience learned from FX. FX is a much more liquid market, but every now and then, you do see, there's an S&B floor that kind of went through, and then there's a massive move following afterwards. I mean, these things happen even in FX, which is a very, very liquid market. So I think liquidity and volatility can always be two different things. And what we can say is that as the OTC kind of gets more mature and established, the liquidity will probably improve. But volatility-wise is a completely separate function, as we know from our experiences in FX as well.
Yeah, and also the lower the volatility, usually the lower the returns as well, right?
Certainly.
Phil, what's your take on what's going on in China? And speaking of the impact of the volatility once the ban fell down there, we've seen the closing of national cryptocurrency exchanges, and last week reports emerged that steps are being taken to block access to foreign ones. Will clampdown have an impact?
I mean, I'm not a huge, China expert per se, but I've often heard people say that, definitely invest in things that China are cracking down on. I don't know if that's the case here or not, but one thing that I have to say, which might help to clear up people's mind, is that when you think of East Asia, there's China, there's Korea, there's Japan. There's three very large markets involved in the crypto space. And one of the very important things that, that people should really understand is that it's three very different markets going three different routes. You often hear, headlines on Korea on, what their stance is. And, I think the geopolitics and the overall, the environment and, the difference between the culture and the way things are being dealt with is how should I say, for some people they understand this, but for others it might come to a very surprise that, it's three very, very different approaches. Japan is going very proactively towards crypto. China is obviously trying to have a lot of controls around it, and Korea is kind of caught in between the two extremities. So again, I'm not in a position to comment specifically in China, but I think one thing that I can say is that, there's a lot of headlines coming out from, these three countries, and, all three are taking a very different approach to cryptocurrency at the moment.
One thing that I can say regarding China is that we've seen this several times over, and every time people think this is the end of crypto in China, it's not. The Chinese traders are going to continue to trade, whether on Chinese platforms that have moved to Japan like Huobi, or other places like Binance, or OTC channels are quite active in China. People are going to trade. They'll find a way.
Yeah, so the overall volumes, probably just the retail speculation that will be affected. The overall institutional volumes won't be.
I think the volumes will definitely be affected, but this is definitely not it's not going to be the death blow to crypto in China. We still deal with everybody still deals with Chinese clients. Chinese clients are active on pretty much every major platform, and that's not really going to change.
Interesting. And Jane, what about your take on South Korea? Have you had much dealings with dealers there?
I've talked to a lot of people that are active in the South Korean markets, because especially after the crackdown in China, I know a lot of the Chinese traders moved to Korea to start trading on the exchanges there. It's a crazy market. There's some statistics saying that 1 in 3 office workers in Seoul owned Bitcoin, which if true is crazy, but it's definitely a burgeoning market. And it kind of got started a little bit later than China or Japan, but when it got involved, it definitely came in with force.
And Phil, the increased scrutiny in Japan with regulators apparently visiting exchanges, is that having an impact on your market?
Well, I think it's a good thing. I mean, for example, one of the things that I was quite intrigued when I came to Japan is that there are these association. There's 2 associations. Japan Cryptocurrency Business Association and Japan Blockchain Association, and these are associations that were given the go ahead from the regulators to basically have all these major counterparties come together and discuss how can we make the overall trading environment better. And this is very interesting, because this is the FSA, who's the regulator in Japan, they come and attend these as well, and it's almost like a study session where all of these major counterparties come together, and then they kind of discuss if there is a major hack or if there is some kind of issue, how can we make sure to make sure that this doesn't happen again. And I think that kind of attitude is great, and I'm supportive of it, and we want to work closely with that as well. So having that, how should I say, a place where people can come together and then there's be on the same page, I think is really important, and I'm kind of glad that Japan took the step to do that. Interesting.
We'll get on to regulation a bit more later, because I have tons of questions about that. Let's stick with market structure for now. Max, a question for you. What do you see as the biggest shortcomings of crypto infrastructure today?
There's a few candidates, but I would go with credit risk. There's a whole ecosystem has evolved in the financial markets over the past, 40 years plus to deal with credit risk, because credit risk is the kind of risk that creeps up and where you least expect it. And when it hits, it hits real bad. So there's been a few exchange bankruptcies where people have gotten burned. But all that stuff, that's happened in the FX market in the past. You remember the Erste Bank bankruptcy of 1974, I think. People used to just do trades like you do them on the in the crypto market at the moment, right? You do a trade, you agree a price, and you send some money, they send their money, and you don't really think of the possibility that your client might not send you the money ever, right? So that's a big drawback, because large institutions are used to having very strict procedures and processes in place, or rather I'd say infrastructure. You look at companies like Euroclear, Clearstream, CLS, that do a very simple function of sitting between the trades and waiting until everyone sends their funds to effect the transfers. That doesn't exist in crypto, and I don't think that's going to exist before some time. Not because there's not demand or an interest, but the problem is that it's technological. It's difficult to do crypto security right, and so before you see a large player like State Street start offering crypto custody, or you see Euroclear doing crypto payment versus payment delivery, they're going to need to be comfortable with the fact that they're responsible for the crypto risk. And it's not like you can go to the bank or the banking system and reverse transactions at the end of the day. If the funds are gone, they're gone. And that's a whole different mindset. There's not a lot of recourse, as many people have discovered, unfortunately, or in various hacks over the past few years. So that's going to take a lot of time. So the absence of credit mitigation mechanisms, I think that's keeping the market back to some extent.
And I imagine the regulators would be happy in general with the development of established or clearing and settlement systems along the lines of what we already have in the market. But for many institutions, sorry, go ahead.
Yes, I would think so. Regulators are not just there to prevent people from doing things. I think regulators, at the end of the day, follow usually quite closely their mandate of protecting the population and making sure that markets are fair and accessible, and etc. So if you can have an improvement in market infrastructure for crypto, I think they're going to see that as a quite a clear improvement, and that's certainly what the GFSA is doing in Japan. The GFSA is telling people in Japan, and Phil should comment on that. We want the crypto market to grow, to be a market where that's very active in Japan. But we need that to be, we need professionals to take care of the infrastructure. We need the gateways to be regulated. We can't have people just run fly-by-night operations. And I think that's the right approach.
And what about custodianship? I mean, many of the institutions, many of your clients can't, or would-be clients, I should say, can't really deal in crypto until they have regulated custodianship. Do you see that developing before clearing and settlement?
Yes, I think custodians, well, certainly, you have new solutions now. There a few of them have popped up. Indeed, they came before clearing and settlement. Just because I think people that were more nimble were fine taking a little bit of credit risk to, let's say, buy some crypto. And then the question was, okay, where do I put my crypto? And that's a problem that you cannot really get around because if you're a regulated hedge fund, the credit risk that you take is sort of, your problem and your decision. But the fact that, you're trading on behalf of limited partners, you have your investors that are invested in the hedge funds, and you're regulated because you have to be looking after the interests of your investors. Well, the question is always, well, do you actually have the assets that you say you have? So that's why they need to be held as third-party custodians, which are readily auditable, etc. And secondly, what is the actual value of those assets? And so you need to have also third-party validation of those prices and asset values. And so that's why I think custody solutions have developed before clearing and settlement.
Yeah, and there's also the hassle of key management as well, which I think anyone who's dabbled in crypto knows is one of the pain points, especially for large institutions with a wide range of holdings.
Absolutely, especially with larger institutions where there's a very strict divide for good reasons. between, back office, middle office, and front office functions. If you're a small hedge fund, it's fine if you do everything in one go. Your traders are taking care of the wallets, etc. But if you're a large institution, you cannot have your traders have access to, back office systems. That's absolutely not okay. And so, developing systems that can, separate concerns, that's tricky. Tricky with this new technology, but I hope we get there and we get there soon.
And it does also imply a certain philosophical conflict. I mean, Bitcoin, as the first cryptocurrency, was built on the whole ethos of decentralization, and we're looking at the institutions driving increased centralization in terms of regulation, in terms of custodianship, in terms of trading and management. What do you think about decentralized exchanges, the potential emergence of a new way of handling crypto trades?
I think that you're always going to have one part of the market that's more decentralized and another part that's more centralized. I think it is overall good that, some, centralized, marketplaces and services are coming up, because it makes it much more difficult to shut down. It's easy to say, well, we're cracking down on Bitcoin when Bitcoin is just some sort of weird currency that's being exchanged, in cash, on street corners. It's much more difficult to say we're going to shut down Bitcoin when, large institutions are generating revenue and are serving customers. I think the integration of Bitcoin with the mainstream economy has to be good for Bitcoin, because it doesn't take anything away from its decentralized, promises. You can still have decentralized peer-to-peer value transfer, even if you have a part of the market that's very centralized. I don't think those two are exclude one another. Now, when it comes to decentralized exchanges, I think the concept is very interesting, but personally, and I other people have different opinions. I think two main problems with decentralized exchanges are that, one, the speed at which transactions can occur can be a bit slow, at least so far in what we've seen. So the problem is that, you look at the FX market, speeds are really high, and and they have to be high because you don't want to be taken advantage of, people picking you off and things like that. So I think that's a problem with the decentralized exchange that exists at the moment. And secondly, you have information leakage because of that. If everything has to happen more or less publicly in a decentralized fashion, then you reveal a lot of information, which is something that people used not to think about. You take Bitcoin. People used to think, oh, Bitcoin's anonymous. I can do anything with Bitcoin. No one's going to come after me. Well, it's not true. And people have woken up to that fact. People woke up to that fact, maybe a year and a half ago, with all the blockchain analysis firms that popped up. Bitcoin is not anonymous. The information has by construction. It has to be out there and it can be analyzed. So I think that might be a little bit of a problem with the decentralized exchanges, that there is a lot of information leakage because things have to happen, publicly.
Zane, what's your take on that? What does the OTC market need right now in terms of infrastructure that it doesn't have?
That's a good question. I think that we're trying to build out a lot of the things that are missing from the crypto side of things. So with our OTC platform, we have APIs that clients can connect to for automated trading. We recently went live with a fix with our fix API. So people that are more accustomed to interacting with traditional financial markets can easily connect to our OTC platform and trade. And I think we'll see this trend continuing with basically trying to replicate what we see in more established markets within the crypto side.
Phil, what's on your wish list for crypto infrastructure?
Well, I think Zane Max touched on it as well. As we mature and as the client base increases, having the right kind of having the same kind of infrastructure, whether it be on the technological side or whether it be on the custodial side and all these other things, we need to basically play catch up to other mature asset classes. So, my wish list is, and we're actively being a part of this, is that we are coming into this very wild west world, as an established, we're establishing ourselves as a liquidity provider and trying to provide these technological solutions to our OTC customers.
Interesting. And the criticism that crypto exchanges are increasingly looking like banks. I think we've explained a bit about how that's actually a good thing for institutional investment. What could crypto exchanges teach banks?
Wow. Well, I don't think it's a bad thing that crypto exchanges are acting like banks. Well, as long as that is disclosed, back in the day, people were thinking about, fractional reserve, and people were going really nuts. Does this exchange actually is running a fractional reserve system, et cetera, et cetera. Well, that's what banks do, and they do that for good reasons. To some extent, the ability to use customer funds for the purposes serves a role in the economy. I think that has to be disclosed, and that's been a very long process in mainstream markets. Banks used to be, it used to be a wild west. You look at pre-20th century in the U.S., it was crazy. Banks were going bankrupt left and right, and it was very unclear, lots of bank runs. And then the Federal Reserve was created, for better or for worse, to put some, a level of standardization into the mix. But banks have been around for a long time, and the fact that they've been around for so long tells me that they have some function to play at least. It doesn't mean that it's all good, but they have some function to play. So if exchanges are acting a little bit more like banks, it's not necessarily a bad thing because it can contribute to the development of the market. But I think that has to be disclosed. Now, in terms of banks taking a page of the crypto playbook, to be honest, I think banks right now have a lot on their plate, and there's a lot to be done in terms of improving their own processes and integrating technology to offer better services, and also there's been a lot of scandals. A lot of them are due to issues with culture, but some of them are simply due to bad systems. You hear all the time banks getting fined because they were not able to properly account for some type of trades and things like that, or report the trade to the right regulators. The reason there is more technological. So I think that banks have just so much on their plate right now. It's too. They have to have other things to think about than to try to look at crypto and think, okay, what can we do that they're doing in crypto that's going to improve our systems.
What about the onboarding? Do you see the onboarding to crypto exchanges, the KYC, the AML regulations, as being along the lines of what's happening at banks, or is it going a different direction?
Well, I think, and Zain also surely has something to say about this, but I think that you look at the best-in-class crypto exchanges, they're doing a fantastic job at AML KYC. The reason is very simple. Even though they typically don't have to legally do it, they do it, and they gold plate the requirements, because if you're not seen as best-in-class, you simply cannot get access to the banking system. So that's very tricky for a crypto to fiat exchange. So in lots of cases, actually, I would say that it's the depth and the quality of the KYC is better in crypto than it can be, with larger institutions. And just give it a try. I remember there was someone who worked for the Bitcoin Foundation a while back, years ago, and the person was paid in Bitcoin, and he tried to convert the Bitcoins. Absolutely impossible. They tried to go, I think it was on Bitstamp at the time. The level of KYC and the paperwork that had to be filed and the source of income, documentation was absolutely incredible. Much more so than what you'd have if you wanted to open a bank account. Let me just try it. You try to open an account at Bitstamp and do large volumes, or walk into a bank in your own country and try to open an account. I think you'll find that it's much more difficult to open an account at a crypto exchange.
That's very interesting, and I'd like to segue from that into regulation, which is very important for all institutions and businesses trying to deal in or set up on the crypto space. What legal jurisdictions does BTC2 fall under, and why did you choose those ones?
So that's a question for me again, sorry. So we have entities in different jurisdictions, and that's driven by a few considerations, the quality of the, I would say, infrastructure or the talent locally, and also regulatorily from how we can best serve our clients based on where we are based. So, if you're based in the UK, like our parent company is based, you can serve, certain clients very well. But if you start, you want to offer services in the US from a UK base, that can become a little bit more tricky. So, we have entities around the globe, and the reason for that is that, we need to be sometimes, have staff locally, be, have the regulatory regime to be applied locally so that we can more easily serve the clients that we have. That's what drives it.
Zane, you've been working in crypto trading for longer than most people, certainly. What's your take on regulation?
It's kind of funny, I think. When I got involved at OKCoin, I was young and I'd say naive, and I was very, crypto, get rid of the regulation. We don't need any of this. We're going to be fine without it. And then within like a few weeks, you start realizing like, okay, that's why that regulation's in place, and okay, that kind of makes sense. And I think it's funny. I've heard people refer to it as, crypto's just going through and learning all the lessons that finance already has, that the financial industry already has. And I think that's definitely true to an extent.
But faster.
Yeah, for sure. Life in crypto is insanely fast. But I think that's with regulation, it's definitely true that, as we go through a lot of we're running into the reasons why a lot of regulations exist, and I don't think that regulation is something that we can fight by saying that we don't need any regulation. It's something that we have to work with regulators on and make sure that we have a solid understanding with them and a good working relationship.
What would spook your clients on the OTC side? What would frighten them?
I mean, one thing that I think people... Yeah, there's a lot of things that spook people. But, I think in general the market's becoming much more resilient, and people aren't spooked as easily. Like, back in the day, somebody put out a bad tweet and, the price would dive. I think now we're seeing a much more resilient market. And I think part of that definitely has to do with the fact that, even after a big downtrend, we're at $8,500. So it's a lot of people that have been in the space. It's hard to spook them with a price at $8,500, right? They've been in it since 80 or whatever. So even a big dive just goes to some still quite high price. Yeah.
You're right. And as we're seeing from the news, even increased reports of bans from China, whatever, not even moving the market anymore.
Yeah.
Phil, what about you? What keeps you up at night, Phil?
Sorry, in terms of what spooks the OTC guys?
No, in general, what keeps you up at night about the market? What would be bad news? What would be bad news?
Well, let's look back at 2018. I mean, we're halfway through February. We've already had a lot of exciting news, and all of these things keeps us up at night because to be honest, we're running a 24-hour risk management. So it's going back to my whole thing about very similar to FX. We're constantly looking at the market, constantly looking at the price action and the headlines. So in that sense, it's another market. It's a really volatile one, and it keeps us up at night for sure. So, and here I am up at night again. So,
but hopefully for better reasons.
I would add to that things that can keep us up at night. So credit risk and also uptime. Whether we're still always in the market 24/7. I think that's quite important in terms of the service level that we offer to our clients. But me personally, it's credit risk is the one thing that would keep us up at night.
Okay, interesting. What would be really good news? What would encourage a lot more institutions to participate in the sector?
Bill, perhaps?
Yeah, Max, you want to go first?
Yeah, sure. Well, as you said, there's the big theme here, which is better infrastructure. That would be good news. If there were, for instance, specific licenses in the US, in the UK, or some major jurisdiction targeted towards crypto, like the GFSA has done in Japan, I think that would be quite positive. if tomorrow the UK came out with a new crypto-specific license, that would be very good. If major players in the infrastructure space started offering services, not just a few players here and there. Again, a State Street would offer crypto custody services. A Euroclear would start clear crypto trades. I think that would be quite positive.
Bill, anything to add to that?
I mean, I think that's the major thing. But for me, another angle is, for me, it'd be great to keep seeing the market cap grow and, seeing more and more involvement in the growth in the volume and the growth in the overall participation, which is always a continuously good news for me. So.
And what about you, Zane? What's on your wish list?
Probably banks. I wish that banks started, dealing with crypto companies a little bit more closely and started building better ties. In some places we see banks that are pretty willing to work with crypto companies, but in others, just every day you're seeing them get shut down. And so my number one wish list would be bank accounts for all the crypto companies.
So better services generally for crypto companies.
Yeah.
And dealing in crypto help.
Yeah, Zane has a very good point here, because one thing that's very sad actually with the evolution of the market is that if you're a startup, sometimes you don't have access. You don't have the right access. But if you're an established company, you do have the level of access. So you find you're gonna have a small sort of broker up and coming in some region that that wants to start having clients and doing a sort of brokerage service. Well, they're going to find it very difficult to get a bank account, because the policy of the bank would be just we say no, right? But if you're, let's say, a big asset manager and you are established, then your banking relationship will not dare tell you no, and you're just going to start doing business, and you're going to get your clients in, and you're going to start processing, payments on the back of crypto trades, and no one's going to tell you anything, no one's going to say anything, and I think that's quite sad actually, because sometimes you have two different two speeds, right? If you're an unknown quantity, and no one's heard of you, but maybe you have something very good that you're about to develop, then people just say no. That's the policy. But if you know someone who knows someone, then you have a bit you have a better access. And I think that's quite sad, because philosophically crypto is also about access to infrastructure by people that normally don't. Like banking the unbanked was a big theme a few years ago, and I think that it's quite sad that we sort of we're stumbling upon the block that is access to banking to this day.
Yeah, that's going to be quite a hard one to overcome, but at the same time, increased banking services would also increase the confidence the institutions have in crypto businesses.
Okay.
On the moving on to crypto markets from a trading point of view, in the few minutes that we have left, Bitcoin has been hailed as the ideal hedge, as is with price movements uncorrelated to the rest of the market. Do you agree? Is it an uncorrelated hedge? And as more institutions come in, do you see that inverse relationship holding, if it even exists?
So one thing that I'd have to go ahead.
Go ahead, Zane. Sorry.
Oh, okay. The one thing that I would say about it, I'm sorry, actually, I just lost my train of thought. The one thing I would say about it is that we haven't seen Bitcoin in a global bear market. So I think it's really hard to say it's a safe haven asset, or to say that it has a negative correlation when we haven't seen Bitcoin exist in a global downtrend. So I think it'll be very interesting to see how it holds up in the coming bear market.
Max, what do you
say? Yeah, that's a good point. We need to see more data. Now, there's been a few events that had an impact on the price of Bitcoin. U.S. elections, the Greek crisis. Specific news, you would see, absolutely, you would see the price of Bitcoin pop. Now, the problem is that gets drowned in the massive rally that we've been in. So it's a bit too difficult to say. Also, I think that with the very low level of interest rates that we've had for 10 years now, The problem is that it's low interest rates is a sort of tide that lifts all boats. And so any asset, whether it's a good asset or a bad asset, the price goes up when interest rates are low. And so I'd really like to see the performance of Bitcoin in a bear market. And the next one might be triggered by increases in inflation and interest rates. So we'll see, on the one hand, higher interest rates are going to lead to lower asset values. That's just almost mechanical. But at the end, but on the other hand, Bitcoin is supposed to be an asset that is resistant to inflation, because the supply is fixed. And so it's going to be very interesting to see what happens. We see again, 10-year interest rates in the US at 5%, and the S&P much lower, and a bit of inflation. I'm really curious to see what would happen to Bitcoin.
Yeah, you're right. That will be interesting. Touching briefly on derivatives, which has to do with its role in portfolios, you trade Bitcoin futures. What are you seeing there? Are you seeing more speculation or more hedging?
So, futures exchanges publish some data on that, but it's well known in financial circles that all that stuff has to be taken with a pinch of salt. I think that the story around futures is really one of market access, which is similar to the story around the ETF that were supposed to come out in the past. There's a lot of institutions that want to get exposure to crypto, perhaps because their clients want them to. And the problem is that they don't know how to do it. Or if they have an idea how to do it, I'm going to connect to an exchange and start trading there. Their mandate may be too limited to allow them to do that, right? So you simply cannot touch the exchanges even if you want to. So what are the alternatives? Well, there's a few market makers like ourselves, but sometimes, they need to have a specific type of regulation, et cetera, et cetera. It's just easier said than done. Now you have futures. Futures trade on regulated markets. You're connected to those markets. You have instant access to those products, and so it's very easy for you to connect. So what you see, I think that a lot of the open interest in the futures at the moment is driven by the people that have a retail user base that want to trade crypto. And one of the only ways for those institutions to hedge is to go and buy or sell the futures, and presumably, mostly buy, which is why you've seen the future trade at a premium. So I think that's been the story there. The futures have expanded the perimeter of the market. That's enabled people that used not to have market access to have market access now. I think that's a good thing. But we thought at B2C2 that the futures were not going to be the be all end all of the market. We need to see a lot more things develop to have a more mature market. In particular, you look at the margin ratios of the futures. The exchange chart imposed something like typically around 50%, and the FCM, so the sort of brokers that give you access to the futures, can even add margin on top of that. So it's not very economical at the moment, so that makes it a bit tricky. Now, if you tell me that, okay, well, 5 years down the line, the futures, the Bitcoin futures are trading on CME at super tight spreads with 5% margin, absolutely. I mean that's a definite possibility, but we're not quite there yet. I think because again, the level of comfort of the incumbents has to increase a little bit. The CME and CBOE are dipping their toes. They don't want to. They're responsible for traders that go belly up. The clearinghouse is actually on the hook if people lose too much money, and so that's why they're being very careful, and I think for good reasons.
Still, Japan, as far as I understand, doesn't yet have a crypto futures market. Do you see that happening?
Yeah, well, I think the main focus in Japan for especially retail customers is the development of more of CFD offerings from retail brokers as well. Futures market, futures exchanges might come up, but I think, focus that I'm seeing is that a lot of the retail brokers want to be able to offer CFDs to their customer, which is slightly different from futures. With different in a few points, but there's no expiry, and then it's a lot more easier for these traditional retail clients to trade through the brokers that they've already been trading for other asset classes, because they're already used to trading CFDs through these brokers as well. So
yeah, it's hard to believe, but it seems that we're almost out of time. I don't know about for you guys, but this hour has flown by and there's still so much to talk about. But I'd like to extend a huge thanks to our panelists, Max Boonen, Phil Gillespie, and Zane Tackett of Cryptocurrency Market Maker B2C2. That's for those of you who signed in after the initial introduction. Thank you so much. seriously, for sharing your expertise and experience with us. It's been fascinating. If any of you listening would like to hear this webinar again, we will be uploading it to the CoinDesk web and we'll send around the link shortly. Again, thanks to our panelists and thanks to you, our listeners.
Thank you very much.
Thank you.
Thanks, guys.
Thank you.
Until next time.